So, hey, friends, wanted to kind of give you an update on a topic that I talked about 2 years ago. And I did a video, and I'll post the link to it up here if you want to take a look at it again. Why I've resisted the temptation to pay off my mortgage. And over the last couple of weeks, I've been doing videos on student loans and amortization, how that all that works, and how interest payments work over time and such. And for some reason, about 3 days ago, I started panicking about my own mortgage because I still owe about 15 years on my primary residence mortgage. And I thought, well, I've got the cash to pay it off. Why not just go ahead and do that, get out of debt and all. And finally, my calmer, rational head prevailed because, yes, I could own my house outright and I would not be paying interest on my loan anymore. But here's a couple of things that, jumped out at me. So I looked at where I had this amount of cash to pay off my mortgage invested. And right now, my mortgage rate is about 4.5%. And I've got a mortgage that I shopped around and sought out a mortgage that allowed me to pay my insurance and taxes separately. So I do not have insurance and taxes escrowed into my payment. So my payment truly is never going to go up. It's fixed over the course of the 30 years I refinanced for. And I looked at what interest I was paying currently on the amount of outstanding debt on my house. And again, I'm just going to kind of give some nominal numbers here, but right now my principal and interest payments are roughly the same. But the return on investment, so I looked at where I had the quote unquote cash invested that I would need to pay off my mortgage, and the monthly interest that I'm making on that money is about 50% more than what my interest I'm paying to the bank is. So in other words, by holding this cash, there's two things there. One, I've got the cash in case of an emergency. If I just put it all in my house, then it's home equity that's not as liquid. If I wanted to get it back out, I would either have to take a home equity line of credit, which is going to be at a much higher interest rate, or I would have to refinance the house or do some sort of reverse mortgage. All of those things would just cost a lot of money. Whereas right now, it's sitting in a relatively safe investment, making a rate of return that is yielding me on a per month basis 50% more than I'm paying to the bank in interest. So, financially, it just does not make sense for me to pay off my mortgage. But again, I got it in my head that, oh my God, I'm paying this much principal and this much interest and all. And I looked at the interest that I'd pay over the life of the loan, and I go, oh my God, at the end of 30 years, I'm going to end up paying double for my home what it originally cost me. Well, guess what? Today, 15 years into the mortgage instead of 30, who knows what the value of this house will be in 30 years, but my house price, according to the market around here anyway, is already double what I gave for the house. So, in essence, over 30 years, I'm going to be paying a total amount for what my house is, at least in theory, worth today if I put it on the market today, 15 years earlier. So again, I'm not encouraging people to go into debt that they can't afford to pay back, but I am suggesting to you, look at your debt and look at the alternative uses of money. In economics, we call this opportunity cost. Look at the alternative uses of that money. And if you're making more on your money than the money is costing you to borrow, then if you're disciplined enough to invest it that way, then I would suggest keeping it. But anyway, I wanted to share that story with you because even me, who I probably look at things in a far more pragmatic and rational way than most individuals do, at least analytically, it even jumped into my head that, hey, I need to worry about paying this mortgage off. I'm not worried about that now. Everybody have a great weekend. Take care.